I'm Matthew Saha. I'm the leader of our not-for-profit industry practice for Cherry Bekaert. And again, I welcome all of you. And before we get into today's topic, I just want to mention that we've already started posting some of the previous sessions that we've had here in the year. So if you want to go back and check any of those out, they're back on the website where you registered for this session. We already have our energy credits and incentives podcast, which was very well attended out there for listening if you missed that session. And then our one on CECL will be coming out and posted very soon. So without further ado, let's get into today's session entitled Help, We Need People. This topic comes up more and more nowadays as far as where are all the accountants going? How come I can't fill these positions? So with us today, we've got two phenomenal speakers, Danny Martinez and Jeanette Schwartz, who are going to take you through this presentation. Before I hand it over to you, Danny, I got a little question for you. Do you know how Darth Vader likes his bagels?
I have no idea.
A little on the dark side. So there you go. Danny, I'll hand it over to you. Have a great session, and thanks for being with us today.
Perfect. All right. Hey, but before you leave, since I know you're the dad joke expert, it's my first time presenting to the not-for-profit group, so I dug deep, did some research, and so I have one for you back, if that's okay.
Shoot.
Knock knock.
Who's there?
Matt.
Matt who?
Matt who? I thought your name was Matthew.
Oh,
boom.
You got me, Danny.
Thank you. That was even worse said out loud than I thought it would be when I wrote it down. So I'm very whatever happens the rest of the session, I feel like I've accomplished something. Good to see you all. My name is Danny Martinez. So I'm a managing director here. Lead our government public sector accounting advisory group. So government, higher ed, nonprofit, helping with a variety of accounting things, writing financial statements, audit prep, implementing new accounting standards, and looking forward to talking with you all today. My co-presenter is Jeanette Schwartz. I'll let Jeanette introduce herself.
Hello, everyone, and thanks, Danny. And I am going to let everybody down. I do not have a cool joke. I was not prepared. I'm going to save that for our next webinar. So I'm a partner in the advisory services practice. I oversee outsourced accounting for nonprofit, as well as the technology services that relate to a lot of the nonprofits, be it accounting systems and other ancillary systems. And I'm super happy to be with you all today. So thank you.
Perfect. So I'll go ahead and get us started. And so how this presentation is going to go today is really it's going to be broken out into two parts. So we're going to start with the first half with a little bit of where are we today, and really where have we been since spring of 2020, and taking a look at current workforce trends in the broader accounting and finance, drilling in specifically to trends related to not-for-profits, and how that is impacting quality of accounting, financial reporting, kind of the fallout that we're seeing there. So we'll do a little bit of commiserating, that first half, but then we'll transition to potential solutions. So what can you all do about it? What are some options that you have out there for you in terms of reflecting and refreshing, looking at things related to hiring, retention, policy and procedure, and then looking at potential opportunities with co-sourcing or outsourcing. How can you do and accomplish your mission of your nonprofit with the resources that you have today? We will open it up for questions at the end, but we do encourage you all throughout the webinar here today. If you have questions, submit them in the chat. When we get to the polling questions, we will try to take some questions that are broadly applicable and answer them for you there as well. All right, so as we're going to move through, the current workforce trends is what we're going to touch on. And you can't go to a conference, a webinar series without talking about current workforce trends, right? What's going on out there? What are we dealing with? It is the number one or number two topic, maybe related to compared to artificial intelligence that you're seeing out there. And so I went to a presentation on this last summer in terms of staffing trends, and they asked the panelists, can you please let us know, give us a book or movie title that you think relates to the current state of your accounting or finance group. And so in the next slide, we're going to have the polling questions, but I'll lead you through the three options that you will have. Warning here, as we show them to you, we are not sharing these responses with your boss or anyone else in your organization. So feel free to keep this. This is confidential. Polling question 1: what movie or show best describes your finance or an accounting environment? The first moderator said Titanic. So what they said there is, we've hit the iceberg. There's people going overboard. There's some people still in the background randomly doing nothing, playing piano, and we're all just looking for the first life raft to get off. Number 2, Groundhog's Day. No matter what you do, whether you work 5 hours, 12 hours, 16 hours, every day you wake up and it feels like it's the exact same scenario. You're just seeing yourself repeating over and over again with no end in sight. Option 3, The Walking Dead. You're in the middle of a zombie apocalypse. There's people just walking zoned out. Yes, Steve in finance has some drool coming out of his mouth, and you're just kind of just struggling with everything. Or option 4D, NA, everything is perfect. No idea what any of you all are talking about. So we'll give you a couple seconds to respond to those options. All right, and then looking at the responses, over half of you all are currently experiencing your own Groundhog's Day. 20% of you are saying NA, everything's perfect. So congratulations, you are in the minority, but that is great to hear, with a smattering of Walking Dead and Titanic as well. All right, perfect. So we started off, a little bit of a joke, a little bit of lighthearted, but really the trends here in accounting and finance, they're bad, and the end in sight, the light at the end of the tunnel, isn't quite there, at least in terms of a staffing perspective. We pulled some research from 4 different articles to share with you today, but really, you go in, you search Google for accounting shortage, not-for-profit, talent shortage, accounting. And you're just going to find a plethora of results. So here are a few from CFO.com. 84% of CFOs continue to face significant talent shortages. They polled 300 executives and found that it's causing CFOs to reevaluate their approach to staffing. Right, you can't put out that job offer and get job post and get tons of qualified candidates. The tackling the CPA shortage related to retiring baby boomers, that is another huge topic that is the current workforce trend. From Fortune magazine, the U.S. is short 340,000 accountants, and just look at the wave of earnings reports mistakes. And Jeanette will share with you in a minute what she's seeing in terms of impacts on quality in terms of accounting and financial reporting. So within the current workforce trends, we decided to focus in on 6 key areas. So 6 key areas that if you're doing broad buckets of what you all are, or what accounting finance organizations are likely facing, these would be the 6. First, overall decrease in skilled labor in accounting and finance. I touched on that 85% of CFOs figure there a couple slides ago, as well as the 340,000 fewer accountants than 5 years ago. The probably most staggering statistic of the 3 is the decrease in first-time CPA candidates has gone down 33% from 2016 to 2021. So a 33% drop. And if you were to look at it, since the CPA exam came out, it was a gradual increase. We're moving up, we're staying steady, right? But we never saw this precipitous drop that we're currently seeing in terms of first-time CPA candidates. So you're thinking about the talent pipeline of the future. In addition, the aging accounting workforce, baby boomers are hitting retirement age. Significantly concerning for the AICPA, right? They're a membership organization, and 75% of their members are likely to retire within the next 15 years. So in looking at the number of accountants that are going to be there, we're going to continue to see the drop off each year. We're seeing it with all of our clients. Just the drop off of the 20, 30-year professional who has all of the institutional accounting, financial reporting knowledge, just going away. In addition to that, smaller firms without succession plans are closing up. So you're seeing a contraction in the public accounting workforce, either consolidating into larger firms. So there's some firms like Cherry Bekaert that are doing acquisitions, but those those smaller shops that tend to have had a book of business that supported not-for-profits, you're starting to see some of this gradually close up if they did not have a succession plan. Another current workforce trend is the pressure to increase compensation, benefits, flexibility, and career advancement. You're no longer competing with the best jobs in your city, but you're competing with the best jobs in the country. I will tell you, so I'm based out of Dallas, Texas now, and there's literally every Fortune 500 company. Headquarters are moving here on a monthly basis, and just the demand and the competition, it's pretty intense out there for the right type of people that had this accounting and finance background. Couple that with the headwinds within inflation, you have a really troublesome scenario that you have. And then you get the people in, right? You spend the time teaching, training, all of that good stuff. 40% are leaving. The turnover rates in accounting and finance for ages 18 to 38, so the ones coming into the workforce, were around 40% from 2021 to 2023. So when you think about the ability of the people that are within the organization to want to spend the time to train and to feel like they're going to get that benefit, when they're seeing 4 out of 10 walk out the door, is a very tough thing to ask of the individuals within your organization. One of the most staggering stats I saw out there in my state, in the state of Texas, was they did a report for Texas state agencies, and they looked at employees 18 through 29. And over the last 3 years, so in the COVID years, they had a 49% turnover rate a year. And so you're talking about an average tenure, of 12 months. And by the time you get to 3 years, when they're starting to really get their feet under them, they're kind of gone, right? So that's another thing that is making it a little bit difficult in the current workforce trends. A couple of others to point out. And this is maybe a little bit of a positive. If you're not finding the FTEs, there's development of solutions like automation, AI, and creating a scalable workforce. So that is a good thing in terms of there are tools and options out there, but the problem is how many there are and how quickly they're evolving. So the accounting and finance teams that you have need to have that more adaptable skill set, right? Embracing change is one of the values that we have at Cherry Bekaert, because we just know that the rate of change is so fast that you really need to be able to embrace and adapt. In addition, there's ongoing challenges on addressing pay equity across factors such as gender, race, and ethnicity. There's a McKinsey study that came out that showed, at the lower levels, the accounting workforce did tend to look like the surrounding neighborhood and community, but as you moved up within the organization, the accounting and finance teams begin to look less representative. So there's also continuing challenges there. Lastly, if that wasn't enough, and Jeanette will touch on some of the not-for-profit specific trends, but the increasing complexity in the reporting environment. A lot of you all just had to deal with leases, with 842, not to as significant extent, but you had CECL as well. We just had that not-for-profit speaker series on CECL, I believe it was 2 weeks ago. So make sure you check the recording on that if that applies to you. But you have employee retention credit, another thing that you had to deal with. You have these energy tax credits that we did in another not-for-profit speaker series. So there's just so much going on in terms of the increasing complexity that it's hard to keep up with everything. So those are 6 of the current workforce trends that we're seeing out there. And so now I'm going to turn it over to Jeanette to dig in a little bit deeper in terms of the not-for-profit specific trends.
Thank you, Danny. All right, to move into the next slide. So a lot of this, Danny's already covered, but there are a lot of publications out there all over the place on the web and here or two on the screen of what the trends are. And I'm going to walk through some of those highlighted ones that we see every day. And I'll move to the next slide there. All right, so not to be repetitive, but nonprofit is seeing kind of the same that the rest of the industry is, sometimes worse. And there are some statistics here on the screen. About 75% of those nonprofit leaders are having difficulty filling the positions, and the average time to find the right person can take months, which is wrong on a lot of levels, because one, the people that are out there looking for qualified people aren't able to do what they're really supposed to do in their jobs, and no one's keeping the trains running, or they're putting an incredible amount of pressure on those people that are left when there are open positions, which of course delays timely and financially accurate reporting in a lot of cases. And for nonprofits, finance committees, executive committees, and boards have very strict deadlines. They need information to run the organization. So all of this vacancy has a big snowball effect. And you can see the turnover rate here on the screen was about 19% in 2022, compared to other industries of about 12%. Now, are we, worse off for nonprofit because of what? Well, some of it goes across the board, no matter what industry. Some of it is that for-profits are competing, for the talent. They may be able to offer more than nonprofits in terms of salaries. Sometimes nonprofits can offer better benefits, but all in all, it is a competition out there for anyone, for all the reasons that Danny already said. But finally, years back, we were required, in order to be able to take the CPA exam, you had to have a 5th year, an additional 150 credit hours to sit for the exam. And as we all know, going to college is expensive. And for those of the students that can't afford it, they're thinking, I need to get out and start making a paycheck. So I may not sit for the CPA exam, and I may not stay in that 5th year. And by the way, I may not even go into accounting because of all of that. Because even if they do get an accounting degree and a 4-year degree, the first question is, are you going to sit for the CPA exam? How are you going to get your 150? So even more pressure there on that. Funders. We all know many funders, some will pay full overhead rates, but many private foundations and many other funders are not interested in really paying for overhead, or not the full freight of overhead, which means our accountants. And as a result, that puts even further pressure on. Grantors want to see program cost and not a high G&A rate. We have seen in some cases reduction in multi-year gifts. So it makes budgeting for an organization difficult, because they're trying to budget, and they need to budget to pay folks in the accounting functions higher money to be able to attract. Next slide. As we said, kind of repeating a little bit here, some nonprofits are limited in staffing due to the budget constraints based on what we talked about. And oftentimes they are looking at hiring somebody who has future potential, may not serve in all of the specific technical requirements today, but has potential. And then they may get them in, but then they have to spend a lot of time training them. And that puts potentially undue stress on certain people. Burnout is a very big thing that's cited here on the right side. And many organizations have had to do more with less, going back to the budget constraints and the staff dealing with a lack of certainty for long term. I would say overall, the big areas are more really in the middle market. While it is hard to find good qualified accountants, no matter how large or small of an organization you are, the larger organizations may tend to have more resources. The mid-market organizations usually have a staff of between 2 to 5 folks. So when there is turnover, that puts a lot of undue burden on those that are left to pick it up, going back to the burnout. There's other trends, and they go on, and I promise we are going to have some good news here after we cover the challenges. There's lack of internal development. You may have folks that have been in your, say, controller and CFO roles for a very long time, and some of the lower levels are looking to upward mobility and may not see it, and that may cause them to leave. And then the second bullet here in points is, as Danny alluded to, there's a lot of additional technical requirements. You have to be a specialist, and if you're in a staff of 2 to 5 in your accounting department, likely not everybody is going to know everything. And so you need to be able to seek people with certain skills and knowledge, or at least have access to where you can find them, which will lead us to sort of our co-sourcing and outsourcing discussion. But grants, restrictions, all of the new accounting pronouncements do require your internal folks to be specialized, and that is very difficult unless you have a very large accounting department with a big budget. Federal funding. Here is really what this first bullet refers to. If you are a federal award recipient, you've now got a whole nother set of area that you need to be specialized in for compliance, for OMB. Some of the specialized funding that we've seen in the last few years, employee retention credits and COVID. There are new OMB rules that are about to come out here, which are going to change things even further. So again, keeping pace with all of that is going on. If you are a federal award recipient and then have a compliance audit, now you have to find staff who are specialized in that area. And we haven't even talked about accounting systems. We're going to get to the technology side, because today you can't keep pace and do all of the things in the second bullet, producing timely, accurate closes, unless you really have efficient technology, especially if you're going to also find staff, remote workers. If you're going to look for best staff, you have to really be open to remote work. And if your technology and systems are not up to speed, that is going to be very difficult and will really reduce the population of available candidates that you have. So all of these are challenges that we are seeing. Okay. Impacts on quality. I think we've kind of covered all of this, but here's what we are seeing. If all of those things happen, you don't have the right people in the right seats at the right time, now you have to have an annual audit. Many of our federal award recipients mean you have to have the audit, issued within 9 months. Your board expects to have timely, accurate audits, so it's meaningful, and that if there are findings, they can be addressed. And if you can't close the books and get audits that are done timely, and you have staffing as an issue, that ends up being a challenge. Your board isn't going to like it. Your senior management isn't going to like it. They cannot do their job without proper books being closed, audits done, financial statements being issued. So 30% here cite an increase of folks who have insufficient accounting staff as a cause of the errors. I don't think it's rocket science to know if you don't have the right people, or if you're down people, the likelihood and the pressure on everybody else, there's going to be a potential for errors. And then, of course, the time to refill the position means work is not getting done. And we referred to in another slide that the time to really find, if you're looking to insource and hire somebody, can be anywhere, depending on the level, 2 to 4 months. It could be even longer. Compliance findings, financial penalties, and then all of those things, if you cannot produce for your donors and your funders qualified audit and timely and accurate financial statements, there's less likelihood you're going to be able to attract and get that type of funding. And getting to the audits. Audit firms are having the same issues as the rest of our companies, nonprofits, CPA firms. It is a challenge, again, getting good accountants. So a lot of auditors are raising fees because they themselves are having staffing challenges. If you are not ready for an auditor, and this is across the board, and in my group, we do a lot of audit preparation and work with a lot of the audit firms. If you are not 100% ready when the audit starts, and you have a 2-week to 4-week window of the audit being done, when you're not ready, they will just push you back. Take somebody else who is ready, because their staff have to roll on to other engagements, which means you're delayed. We have seen delays of up to 3 and 4 and even 5 months when an auditor comes in and all the audit work papers and accounts aren't closed. And if you're not ready, you have rising costs of the audits and the 990 filing. So you budgeted for these audit and 990 fees. Now you're not ready. Now you're going to have additional fees you weren't counting on. And are not in your budget, in addition to all the other problems we've already addressed. And then, of course, the 990, you have certain timing where that is due. We've seen certain cases because of the issues with accounting staff that we've had to file the 990 before the audit's done. And then you may have to reissue the 990 and reopen it up. And again, that's even more costs. So all resulting in a lack of confidence in your finance committees, boards, etc. Okay. Polling question number 2. Which of the following trends has most impacted your nonprofit in the last 12 months? And we've got 4 options: staffing vacancies, insufficient systems and a lack of automation, employee burnout, or technical expertise required for grant or accounting complexities. So please fill in the polling question. Here's our results. Well, we clearly picked the good webinar to do today. I'm sorry, number 1 and number 2, and even number 3 are what we're finding. But again, I promise we're going to give you some options that hopefully you haven't been thinking about. Staffing vacancies, insufficient systems. I will tell you that in our group, we work with probably just within the Cherry Bekaert outsourced accounting and technology. We work with well over 200 nonprofits in some kind of capacity. And we'll talk about how. And the first 2 are the reasons why: insufficient lack of automation or not keeping up to date with technology is 90% what we see when we get a new client.
And in case you all didn't see the percentages, I know sometimes we roll those out, sometimes we don't. If 40% were staffing vacancies, and then the second 2, B and C, were about 25%.
Yeah. Okay, Danny, back over to you.
Perfect. So we're not going to end the webinar there, like Jeanette said. That would be awful, right? Hey, here's all the terrible things. Best of luck, right? We're not going to do that to you. We are going to spend the last half of this webinar proposing some potential solutions. So things that you can do, that other nonprofits are doing, to kind of help combat the current workforce trends and those things that you saw in polling question number 2. So I'll go ahead and start with reflecting and refreshing. Okay, so what can we do in terms of reflecting on our current position, and how can we maybe refresh some things and take another look at some things? And so the first thing that we suggest is acknowledging reality, right? I think we're here 4 years after COVID, and I think you're looking at so you have that. We're gone back to normal there. Then you're looking at the workforce trends. You're looking at the retirement, right? 75% of AICPA members retiring in the next 15 years. The lack of influx, and so we just need to sit there and understand that this is just a different environment than maybe what we're traditionally have had in terms of resources, staffing, all those types of things. So we're going to look at it from 2 frames here. When we're reflecting, we're going to look at questions to ask related to hiring and retention. So we acknowledge that the pipeline is smaller. So what can we do? What about our hiring process needs to be changed? What is the turnaround time from application to hiring? At that same conference I was at last year, it was mostly government and nonprofit entities, and one of the governments, which you can imagine is even worse off in terms of red tape than one of the not-for-profits, was bragging about a 3-month beginning to end turnaround time from application to the person's first day, and saying like it was a huge turnaround in the organization. And actually other entities in the crowd were like, wow, that's great. Because some of the other ones were giving stories about, oh, it's 8-9 months from start to finish, all of the red tape, everything that we have to go through, all of the interviews. And so what we've seen in studies is about the average turnaround time is about 21 days. And so look at that turnaround time and compare it to what you have, and is there ways to create efficiencies within that process? In addition, when's the last time that your job postings have been refreshed? And so are you just rolling out the old template that has duties that aren't even compatible with what you're hoping this new position does? Are the minimum requirements the must-have, are they really must-haves or are they nice-to-haves? Can you get to a little bit more skills-based versus X number of years in this specific role? When's the last time that you refreshed what people are seeing externally? You may have in your mind what you want the person to do, but what they're seeing on the job sites may be a completely different picture. And then also for the people that you have, what are your organization's retention efforts? So we touched on, I think we're in the phase where that burnout factor is a little bit high, right? You have the people who are loyal to the organization, loyal to the mission, and they're just continuing to have more and more on them, and hey, things are going to get better when type of conversations have kind of lost their power or their potential, right? Because we've kind of settled in to this new phase. So looking at what are your retention efforts. So some things that you can do related to this, look at what non-salary benefits you can provide. Are there any type of flex schedule that Jeanette pointed out how they're having that hybrid or remote workforce is going to be really helpful for you all. Any unique benefits? We're working on a separate project where we're looking at benefits that organizations provide. And we found a list of 28 different benefits that organizations are providing in terms of the different types of leave that are being given out. So are there certain unique benefits that you can provide that would be interesting or impactful to the people that you are trying to recruit that maybe won't have such a big monetary impact on your organization? Another thing you want to do is cultivate an environment of continuous professional development and growth. We touched a little bit on the perceived barrier that some employees may have in terms of, hey, there's only one director or executive level position within accounting and financial reporting. The person that in the organization isn't going anywhere, so I'm kind of stuck. Are there other ways that you can promote continuous professional development and growth in their career within your organizational structure? Secondly, emphasize the mission of the organization. Studies continue to show that purpose often ranks as the #1 factor that people look for employment. So this is a strength for nonprofits, right? A lot of the people that work for your organization are passionate about the mission, and that's really what drew them in. So how can you not only emphasize it when you bring them in, but continue to have them involved, not just in the accounting, financial reporting, or the month-end close, but to be involved in what drew them to the organization in the first place. In addition, highlighting DE&I and other community impact efforts. So this is kind of taking credit for what you are doing and making sure that it is highlighted. In a lot of ways, when working in the government public sector industry, what we hear from people we're trying to recruit into our organization, sometimes maybe it's a little bit flashier to work for a public company and fortunately for us, mission is starting to rank up there as another high factor, and that's something that we who work in this industry have that maybe the public companies can offer as well, and so emphasizing that as well. And third, consider the use of a recruiting and staffing partner, and I'm going to turn it over to Jeanette here to kind of share a little bit about how, with your limited time resources, how utilizing the recruiting or staffing partner might be another good way to think about hiring.
Thanks, Danny. So people have different visions of and interest in using or not using a recruiting firm. There are certainly a lot of recruiting firms out there, and you're going to pay a commission, but there is an extremely good reason to do that. And I just want to sort of talk about what that does. We here at Cherry Bekaert have a whole arm of folks. While I'm on the outsourced accounting side, we have a whole recruiting and staffing contingent we call resources, and they place temporary and permanent staff. Now, what they're going to do for you, and the reason that you pay the commission fee, is because they have access to, and this is their business, a whole contingent of folks, both in the temporary and permanent space in various industries. They have already screened. They continue to use recurring consultants in the temporary side and work with you directly. What that's going to do is take off the time that it is going to take your executives away from what they already do, to now do a search, to go through resumes. And these are experts, especially I can speak on the accounting and finance side, that were on our company, our accountants, and understand what they're looking for, understand what different accounting systems are and what that means. If you're spending 3 to 4 months finding a replacement, that's a lot of salary and fringe dollars that you're going to save by using a recruiting firm. I can tell you our turnaround time on the temporary side is usually a week or two. No, they are not always great temps, but if you've got the right firm and the right partner, most of the time you're gonna find what you need to keep the trains running. And it really is a cost benefit. You're going to end up spending a lot more in salary dollars. And we'll tell you kind of how we work. Going to get to where we start talking about outsourced accounting, but oftentimes the biggest call that we get is on the temporary side, and they say, I need someone full time because I just had someone retire, I had to terminate, they walked out on me, and I got my audit starting, and I need to keep the trains running, I got to pay bills and employees and things like that. And whole contingent, we can turn it around pretty quickly and have somebody in there, while we and you get the opportunity to reflect on what you might need longer term. Sometimes this turnover and the use of a temporary solution can give you that very valuable time to rethink and restructure, especially if your systems are not well automated. If you were to do automation, it might find by using a temporary solution that gives you the flexibility to fix those things, and you might not need in a permanent solution what you thought you needed. You can do temp to perm. You can do temp while you're looking for permanent. Temporary solution gives you some flexibility to find the right candidate and not feeling rushed and stressed in doing so. So again, we do that, but that is a very, very important thing to consider. And don't say no because it's a recruiter or because it's a commission. It's really can be quite a cost savings, and overall turning things around without having to go do it yourself.
Thank you. And so we're trying, as we go through this, reflecting, refreshing, trying to share just different tools in your toolkit that you can have in terms of addressing what you all reported as 40% of you, the staffing vacancies and challenges. But in addition to staffing, the other area that we're going to say that we should acknowledge reality on is related to your policies and procedures. And so what we're talking about here is some questions that you can ask is the organization trying to revert to pre-COVID ways, right? Before we had the rapid influx of technology, when we're all having to be working within an office for a lot of organizations. Are we trying to go back to that versus were there efficiencies that we gained either through efficiency by fire, right? We could not find the people, or we had to go remote, had to go hybrid. Did you find efficiencies that were gained through positions opening or through shifting to that remote environment that are sustainable? And we'll touch on in the next slide things to emphasize in terms of segregation of duties. But we don't want to just pass those to the side if something actually, if that emergency actually gave us some benefit. And then lastly, do your written and policies and procedures align with what the organization is doing? Oftentimes with our clients, what we'll see is a beautiful, both on the advisory and the audit side, beautiful written policy and procedure document of everything that you need to do for all the significant transaction cycles. Auditor comes in and says, hey, great. It says here that, for this transaction cycle, this is how you approve. Can you show me an example of that? And then the person who is actually doing the job, it says, oh yeah, no, that's what we used to do, but we've changed it and now we do this thing, right? So is there alignment there? And so you want to think about, can we use this as an opportunity to analyze our significant transaction cycles and those key controls? And so what you could do, right? You're balancing time versus benefit, is look at those significant transaction cycles that'll have the most impact. So you can see here, we've outlined 6 that we think might be of good use to look at: contributions, pledges, net assets, government revenue, meaning your grants and awards, your financial reporting close process, investments and interest held in trust by others, and large revenue streams. And maybe you don't take them all out on at once. Maybe you do it rotational. First year, I'm going to clean up these two. Next year, I'm going to clean up the next two. So that is one way that you can help you all out with where the current workforce environment by just doing this refresh of your policies and procedures. One thing I do want to emphasize while we are saying, hey, did you find some efficiencies? Make sure that within those efficiencies, you are still maintaining segregation of duties between preparation and approval and recording functions. Yes, it would be the easiest for you to just do it all yourself, right? You receive the check, deposit the check, post the entry, reconcile the bank account all by yourself, and maybe in some circumstances, but we still need to be thinking about controls, segregation of duties when you're doing that. This is also an opportunity to leverage technology and automation. I know Jeanette is very passionate about technology, automation, how those interface. But I will tell you just anecdotally, this has been a really significant. We've seen a really significant uptick recently in ERP updates or in willingness to pursue automation or technology solutions. And really, it's just because the technology is getting to the point where the benefits are outweighing that cost that you all have of change management and having to deal with that. And so I will tell you all that a lot of organizations are deciding now is the time. And so if you've been holding off, I would suggest you really look and think about, and get with your boards and think about, is this the time? Because there's a lot of things, and here are just a few of them, of the benefits. You have always on anomaly detection and auditing, machine learning guidance, custom validations, data integration and monitoring. You can configure your task workflows, automated billing, payment, JEs, question answering. And you can really do more with less, meaning less people, if you have the technology working for you instead of against you. And so this is another part of the thing. Like, if you were to talk to Jeanette about, like, how does this all interlay and interface? This is she can do a whole webinar just on automation and how you can improve in that. Maybe she will here in the future. All right, I told you there's two topics that are always touched on: staffing challenges and AI. So I had to throw in the AI slide, and we even got asked a question. Well, you mentioned current workforce trends. One of them is AI coming and helping, right? So is that going to save the day? Is that going to help us with the talent pipeline? And there's going to be a lot of that things that you were doing with people that you're going to be able to be doing with artificial intelligence. But a couple slides on this, if you're starting to think about this, where can artificial intelligence fit within your toolkit? Three things to consider. Is there a strong business case for it? Why are we doing this? Not just because it's fun, and which it is, but what is the business case that we're doing to implement artificial intelligence? Two, very important. Do we have the proper talent to implement and execute this? Just like an ERP implementation can go completely a mess if you don't have the right people, trying to implement an AI tool could have the same negative impact. So do I have the talent in-house to do this within IT, or do I need to partner with someone related to that? And three, compliance with corporate governance and security. If you're opening up and you're providing your data in some cases to these AI tools, making sure you understand what you're doing in terms of privacy, security, corporate governance with artificial intelligence. A lot of ways just to dip your toe in now. Low cost barrier to entry. Some areas that you can consider is within research. So looking up and researching trends, organizational impacts, those types of things. Letter writing, a lot of good tools to craft letters out there. Image and logo creation. You want to be careful with copyright infringement things there, but there are really good image and logo creation tools, as well as Excel function assistance. If you don't remember how to do the XLOOKUP or SUMIF or any of those types of things, you just write a couple of sentences. Hey, show me how to do blah, blah, blah in Excel, give that to you. So just a few really quick ways that you can dip your toe into artificial intelligence. And again, it's a whole topic in and of itself, and it is definitely going to be part of the toolkit. So we want to at least touch on it here. Polling question number 3, how closely aligned are your written policies and procedures to what your organization is doing? A, they align perfectly. B, not perfect, but they're close. C, if I'm being honest, they're way out of date. Or D, what do you mean by written? 2/3 of you say not perfect but close. 16% say that they are out of date. 9% of you are perfect, and 9% of you also are not perfect. Meaning, what do you mean by written? So thank you all for your responses there. All right, we're going to touch on two more topics as we kind of wrap up here, in terms of approaches that you can take related to staffing challenges. And one is a co-sourced approach, and one is an outsourced approach. And if we're being honest, there's going to be a little bit of overlap between the two approaches, but we'll try to lay out what they are, just so you have an idea of different options, again, that you can utilize to help keep your accounting and financial reporting free from error, with the staffing challenges that you're facing. So a co-source approach, this is probably less familiar than the outsource approach. I'm sure if you did the Google searches, you'd get five times more descriptions of an outsource approach versus a co-source approach. So a co-source approach is a collaborative approach to the accounting and financial reporting function. The NFP and accounting team work collaboratively with a professional services firm to manage the finance and accounting function. Typically, the routine day-to-day operations are handled by the not-for-profit team, with supplemental scaling or resources coming from a professional service firm. So kind of working together. Really quickly, Jeanette, can you hear me?
Yes, absolutely.
Perfect. Well, my third of 3 screens went out, so I was just making sure I wasn't talking to myself. All right. So the benefits of a co-sourced approach is you have access to specialized financial and accounting expertise on an as-needed basis. So being able to scale up and scale down when needed, still leveraging the best practices from other not-for-profits. We're always thinking about cost benefits, so it is cost effective when compared to a full-time FTE in terms of the amount of work that you can get accomplished for one FTE's worth of salary costs. And it eliminates training and retraining time and costs. So when we're thinking about the turnover, the average 18-month employee who you train up and then goes on to another organization, within this model, you'd be able to retain retain that institutional knowledge that it's learned. Other benefits, providing support to those constrained resources that you do have on the team. So this is not an in place of, this is in addition to. Being able to spend more time on important, bigger picture strategic tasks. Being able to spot blind spots more a little bit earlier. And so oftentimes if you have someone with significant institutional knowledge, maybe sometimes they're so used to doing certain things a certain way that the blind spots just aren't as prevalent. And so being able to spot blind spots early, as well as the surging up and down when needed. So this is some of the stuff this is the way that my group kind of approaches these things. And really what you're looking at, if you're saying, yeah, co-sourcing is probably what I need, or what we call as a surge team, we actually got called that by a client because we surge up when needed, so scaling up and down, is you're looking at areas that are project-based, that need urgent resources, short amount of time, technical expertise, and that can be easily carved off. So some of the areas that you can think about is year-end close, ERP or other project implementation. So if you are taking that jump of implementing a new ERP system, someone still has to keep the lights on while you're going through that change management. Filling gaps on employee turnover, similar to what Jeanette mentioned. Highly technical accounting areas, implementing any new accounting standards is a big area there. And easily spun off projects. So things are easy to carve out is writing financial statements, certain subledger account reconciliations, and of course, a new accounting standard implementation. So a different way to think about it in terms of teaming between and more project-based versus people-based solutions. And those are certain areas that you can think about related to co-sourcing. With that, I'm going to go ahead and turn it over to Jeanette to touch on an outsourced approach.
Thanks, Danny. And so I'll try not to be repetitive, and we're running out of time. On the outsourced approach, and can you move to the next there? Thanks. Basically, an outsourcing firm that is nonprofit, specialized, or whatever your area specialization is, is able to outsource all or very little. We outsource sometimes just AP, we outsource just CFO services. We could do all of it. Just for understanding, my team is about 55 folks. And so what we also bring is consulting services. We do some of those surge services that Danny is talking about. We can do consulting services that just bring us in to do technical work, like when the new 842 lease implementation came out, or sometimes our clients say, listen, we don't have someone super versed in the grant area. It's complicated. Can we run these by you and just have you come in and look at those types of things? It's all across the board. We also do a lot of diagnostics. We get a lot of work this way, which is, on my accounting team says they need 3 more people. I don't understand. I just need somebody independent to come in and do interviews and come up and let me know what our best practices are. What are we doing good? What are we doing? What would you recommend? And we do that, and we come that people, process, and technology. But the right accounting firm that you outsource to can actually be a huge upgrade. And because we do it for so many like-minded organizations, you could save a lot of money doing it as well. You're going to get access to lots of people when someone's on vacation or sick or turnover. The operations aren't going to stop, which is not similar to insourcing. And we are cross-trained. So you're going to get the benefit of checks are going to go out, payroll's going to get paid. If I can't attend a board meeting to present to them, somebody else can. You're going to get modern systems. We know the best technology and how to use it and how to get the most out of it. We can scale up and down as you need, and we certainly are used to our industry and those things that are specialized compliance and others. Some of this I've touched with. Here's a list of things that we can do. What I always like to say is with an outsourcing firm or group of folks, we can do absolutely everything under accounting and finance with the exception of doing performing audits. So here's some of the things that we do in our group and in the firm.
Perfect. Thank you so much, Jeanette. And I know both of us just love talking about this topic and all the types of things all the toolkit that we have within Cherry Bekaert to provide assistance and support to our audit and non-audit clients. And so as we close, your last polling question, are you currently using an outsourced or co-sourced approach to your accounting and financial reporting? Yes, we outsource. Yes, we co-source. No, but could see us outsourcing in the future. No, but could see us co-sourcing in the future. No, and likely won't in the future. And so as we wait for this last polling question, just again want to reiterate, thank you so much for your time today. And hopefully you all found this valuable as part of the Not-for-Profit Speaker Series. A couple of the recordings are already out, and so you should be able to grab the prior ones if you want to sign up for the rest of them. It looks like we just shared that in the chat. But we're always looking to provide value to you all in terms of this free CPE and content to better prepare you as a nonprofit for everything that you're going in that you're facing. So let's see if we should be getting very close here to the response. And it answered, but they didn't share the result, the percentages with me. So it's going to be oh, there we go, got it. So in looking at it, it looks like about half of you all don't use it, but about half of you all either do use it or are planning on utilizing it in the future. So I think that kind of speaks to why we're here today and why this was such a prescient topic, because if you would have done that poll 8-9 years ago versus now, you're starting to see the trend of what else is out there, what can we do, how can we best support the mission of our organization. Thank you again so much on behalf of Jeanette and I for your time. I'm going to pass it over to Mr. Matthew to go ahead and close this out.
Cracking me up, Danny. I appreciate it. Thank you so much to Danny and to Jeanette for all the time in today's session. Great session. The next one coming up is going to be on May 15th. So mark your calendars, May 15th, same time, same place. That's going to be sorry, today is May 15th. Ignore that. It's June 12th is the next update. I'm looking over at my screen here. June 12th is the next update. It's going to be an A&A update for you, so accounting and audit update. Look forward to that, same time, same place. And then, yeah, we'll sign off for today. But Danny, before I end, what do astronauts use to keep warm?
I knew you had one more in your pocket. I have no clue.
Yeah, space heaters, buddy. All right, so we'll see you all next time. Thanks again for joining us today, and have a great rest of your day. Thank you.